Despite ongoing concerns that the market is becoming overheated, share markets continued to perform strongly during March. The Australian market jumped higher for a sixth consecutive month after economic growth and employment numbers both came in better than expected. The rapid rollout of vaccinations in the US, combined with the approval of President Biden's stimulus package, led to a bumper month in global developed markets, while policy tightening in China was influential to the lower relative performance in emerging markets. While Australia has now had its first full month of COVID vaccinations, and fair to say, the rollout rates have been somewhat disappointing so far. Promising to deliver 4 million doses by the end of March, Australia only managed 700,000, which equates to just 2.8% of the population. Israel is currently vaccinating its people faster than any other nation. As at the end of March, over 55% of their population had received the required 2 doses to be fully vaccinated, while an additional 5.4% remain partially vaccinated. As we can see, both the US and the UK have made impressive inroads with their rollout programs as well. Although Australia's rollout has been plagued by supply and distribution issues, it could be argued that it just hasn't been the same urgency compared to countries like the US and the UK, whose situations have been much more desperate. However, as we saw in Brisbane prior to Easter, until an overwhelming majority of the population has been vaccinated, countries will continue to be at risk of additional virus outbreaks and further lockdowns. And given economic recoveries are already largely priced into markets, any subsequent setbacks or disruptions are likely to have an adverse impact on share market performance. On a more positive note, Australia's employment numbers have been really encouraging in recent months. A key metric that is often observed by the RBA when setting its target interest rate is the level of underutilisation or spare capacity in the labour market. Spare capacity is typically measured by summing together those that are unemployed plus those that are underemployed and would like to be working more hours. When spare capacity is reduced to a low enough level, it tends to force upward pressure on wage growth and inflation, and this is exactly what the RBA will be wanting to see before it considers raising interest rates. However, with JobKeeper terminating at the end of March, it's expected that up to 150,000 jobs might soon be lost, meaning that this downward trend in unemployment may begin to track sideways, at least for the next few months. Thank you for watching. For a more comprehensive market wrap, please visit the Capital Partners website. And if you're watching this on YouTube, please subscribe to our channel.